Welcome everyone to the Jobkeeper webinar, $1,500 Jobkeeper subsidy. Thank you guys for joining in. I've got a lot of people still joining, so awesome. Good to see the numbers jumping. Tonight, obviously on tonight's webinar, we've got a lot of things to go through. It's jam-packed with information on the government's Jobkeeper subsidy. I'm getting a few questions and things through chat already, so thank you for that. I'll try and answer them shortly. But tonight, yes, I just wanted to run through what's the objective of the Jobkeeper. Obviously we want to get the cash in. We want to get it as quickly as possible. And obviously we want to get it right, okay? So a lot of our clients have probably received from us in the last day or two an email which runs through, I suppose, the seriousness of the Jobkeeper application and what it entails. So I just wanted to sort of touch briefly. Tonight, we're going to have an awesome list of panelists here that are going to jump on. And the panel are going to run through and look at, obviously, the eligibility criterias and all the things that we need to worry about in terms of whether employees are in fact, actually eligible as well. And we're also going to look at the potential penalties and risks and things that are attached to that. So finally, finishing off with one of our stars, Sam Purcell, who is a guest on tonight's panel. He's going to run through a live demo of a file just to give us a sort of tips and tricks on how to make this thing work. So I just wanted to bring those people in now. So I just introduce Canio Muscillo from Muscillo Romano Accountants. Canio, you there, mate?
Yeah, I'm here, Michele.
Awesome, mate. Thanks for joining us. Thanks for coming on the show. I've got Megan Hunt also joining us tonight from the same firm. So Megan, how are you?
Hey, good. Thanks, Michele.
Awesome. And Sam Purcell, he's hanging around there. Sam, are you there?
I'm here. Thanks so much for having me, guys. Really appreciate it.
Awesome, mate. I love those earphones, mate.
Cheers, mate. Just been gaming.
You're coming in loud and clear. All right, guys, I just wanted to quickly say thank you to the panelists tonight. I'll thank you guys at the end, obviously, but I really appreciate you being on tonight and giving us information that's going to help us through this Jobkeeper subsidy. And obviously, it's here to stay for the next 6 months, so we know that's there. I wanted to make just a quick soft plug to one of my guys, Awesome Lord at Mediable. Thanks for helping us out tonight and getting us live with a few different things, so that's cool. And I also just wanted to answer a quick question here in the chat. Someone's asked, how do we want questions? If I can ask you to put your questions in the chat panel, and we'll try and answer them as we go. But also, if I could ask you to send your questions over to info at MURO.com.au, and the accountants will try and get back to you there. So let's cross now live to Canio and look at some of the key considerations that I think we need to look at, definitely from employer eligibility situation. So Canio, take us through the employer eligibility situation, please.
Okay, you're going to put those slides up, Michele?
Yeah, I've got them coming. Yeah.
Okay, just want to take this opportunity to thank everybody for listening in to our videos that we've been doing and keeping you updated. We're honoured that we've been able to help so many people. The tributes that's come through has been amazing, and guys, you have been amazing by the fact that you've tried your hardest to keep your business going. And you've done what you've had to do. You've self-isolated, and you've been trying to attack the problem that we have now, which is the medical issue. And from that, we've had this economic drama, which the government is trying its best to aid and abet. So if we can just stick together and during this time and get as much information as possible, we'll be through to the other side, and we'll be in the best, put our best foot forward.
Can I just interrupt? I think is your video not coming through properly there?
No, I'm fine, mate.
Yep, all good. Okay. Right, there you go.
Okay, so guys, for those of you who've been following the videos, it's been important to understand that there's not been a lot of information in the legislation, and there's been a heaps of noise out there. So what we're trying to do with these videos is trying to cut through that noise and get you to the real information, which is the core of this whole thing, which is the legislation piece and the information memorandum. There's a lot of speculation. There's a lot of things that goes with this. And I think what you need to understand is that there's two things here going at once. There's the political argument, which is the Prime Minister and their team, who have done a great job, in my opinion, who are trying to get everybody some money to get them through to the next side. But then you've got the police now, which are the ATO, who are in charge of holding this legislation together to ensure that people aren't taking this by the wrong ideas and doing the wrong things, and not having the right way going forward. So the issue that we have now is employer eligibility. So you just got to remember, the first thing you need to do is get the employer registered. So the idea that we have, and this has been the hard part of it, we started getting information on the first lot of legislation regarding employee. Okay, what employees are included? Are we getting casuals included, part-timers, overseas people? But the second part of legislation, which is more the rules, which is what I was waiting for and a lot of accounts were waiting for, that was most important, because if you're not eligible as employer, you can forget about even worrying about the eligible employees. So if we can go back to that slide, Michele, thank you. So remembering the scheme commenced, I'm going to try to get through this as quickly as possible because it is very high level, but we've got an example at the end which hopefully ties everything back into it. But the scheme commenced on 30th of March and concludes on the 27th of September. So 6 months there, 13 fortnight periods. So most businesses, and I'm assuming that most businesses that are on this webinar or might listen to the recording are going to have to prove a 30% reduction in revenue over this thing called a test period. So you heard this word test period. We're going to look at that tonight and understand what does that mean. For bigger businesses that turn over $1 billion in revenue, you need to define a drop of 50%. It also includes not-for-profits. They've got lower thresholds. But just be mindful, I've put on the slide there, be mindful for employers that have different businesses. So you might have a situation where you've got a number of different businesses, and you might have those businesses in different structures. So it's not a one business fits all, it's a one entity fits all. So every entity needs to be tested. So it doesn't necessarily mean that if one entity doesn't pass the test, your other entity that's got your, say, secondary business in it might pass the test. So that's important. And just remembering that bankrupts and entities in liquidation aren't eligible. So if that's happening right now, don't even apply. All right, so let's look at the next Q period, which is a test period. So what is it? The information that we got on the last night, I think it was the Thursday or Friday night, we got this information regarding the test period, which is so important. So a test period means, in effect, that you need to test between 2 points in time to see whether you've got this 30% drop in most cases. So it can be any month from March 20 all the way to September 20. So each individual month is a test period, and also a quarter. So the quarter commencing in the legislation is the 1st of April. I like to call it the June quarter. And the other one in the legislation instrument says the 1st of July 2020. I like to call it September quarter. So you can test it any month between March and September, or a period of the March, April to June quarter, or the July to September quarter. Now, this is where it gets really messy as well, potentially, is that they start using this terminology between, you have to test the thing called a GST turnover and a projected GST turnover, which is defined in the GST Act. And you don't want to start trawling through that Act. But basically, you've got to make sure that your turnover, it's not just your sales and so forth, and your income that goes on your P&L. It's doctored to the fact that to GST turnover. Now, it doesn't necessarily mean that you have to be registered for GST. So don't get worried. A lot of clients are worried about that I'm not registered for GST. Does that mean I'm out? No, you're not. It just means that certain things are in or out. So we need to, and from this very high level discussion, we don't want to go through exactly what that means, but just remembering there is a definition of what your turnover is going to be. So you've got to basically prove that the reduction in your business is compared to the prior corresponding period of 2019. There I am. So the best thing on this slide, and that's why hopefully my videos come up to see me now, well, the best thing I'm going to tell you about is that once you have tested and qualified, that's it, no need to retest. So this whole myth about, oh my God, every month I'm going to have to test, and what am I going to do, and how am I going to pay people when I don't know what I'm going to be turning over. Once you pass that test once, you're in for the whole scheme of 13 fortnights. So that's a good one. We go to the next slide, Michele. Okay, so let's have a look at my warning on the projected turnover. So remember, right now we're sitting on the 21st of April. So a lot of you guys might know what your April turnover is going to be. but a lot of you might not. Now that means you are projecting. So if you're going to be using the month of April, then there's no doubt about it, you will be projecting your turnover. Because if you want to get into this particular month, and you need to know that you're going to qualify for this month, because you have to have made those payments back from the 30th of March onwards. So therefore you're going to project. So just be careful about projecting. So you'll need to forecast your GST to ensure that you know your GST turnover, sorry, to ensure that you know what your turnover is going to be for the month. And remembering that you can't just rely on straight line basis, saying, okay, it's 21st of April. I reckon, well, the rest of April is going to be roughly the same as it's going to be the first part of April. Well, if that's true, then that's great. You need to document that and make sure that you quantify that. If the ATO comes knocking and says, how did you work out your projected turnover is going to be X? We need to say, okay, well, the first part of my April was pretty high because it was still stemmed on turnover or work in progress that was happening in the first period of the month, which is still okay because it's pre-corona. And the last couple of weeks of April just been terrible. And it could be the fact that, you could say that we had to close down or something. So you need to very much talk to us, or if you're going to be doing this yourself, have these things documented. I think you should have some massive work papers that show and prove. There could be telephone attendances, it could be quotes that you are doing, it could be anything that you need to do. That's very important that you have that turnover test quantified, and that's what we'll be doing here for our clients who asked us for help them out. And just be careful that if you're very much on the margin when you're estimating your income, what happens if you're estimating today and you're out by a couple of percentage points? There's no allowance made in the legislation for being over. The Commissioner does have a discretion, but just be careful that you're 28 or 29% or 32%, whatever. You've got to be very careful that you don't overestimate and having to pay this back. And Megan will talk to you more about the ramifications of that later on in the webinar. So, as I was saying before, it should be fairly easy to assess this at a gut feel. So you've got clients, and unfortunately, I've got various clients that are unfortunately in businesses. Some of them I've said a chat to hello before the webinar started, but have been totally affected, as in zero income has come in since they've had the government have a social distancing enforcement that they can't open. So those ones are very, very simple and very easy to say, okay, I've just been closed for the whole of April and I'll be closed in May and June, so there's no income. But so they're going to be easy, but there's going to be other ones that are going to be difficult. And I've got a lot of clients that we're looking at them very closely, and you can't use your gut feel on this. You can't just say to the ATO, hey, well, I think that, sales don't look as big anymore, but you've got to remember, you've got to benchmark to benchmark that against. You don't know that your last March or last April, May or June might have been terrible as well for certain things. So you need to benchmark yourself against that and review it. So you can't just assume that you're going to pass a test. So, this is a case for where, you might have irregular revenue cycles. There might be some contracts now that have been put on hold. So you've got to make sure that you're looking at that properly, and you don't just assume. It's the worst thing you can do. Next slide, Michele. So this is the next test. So that first test we're talking about, not to get too verbose in what we call it, but that was called the basic test, where you basically test your turnover in 2020 and you reflect it back onto the same period in 2019. But what happens if you don't have a 2019? You only started business in Christmas last year, or potentially last March or April, May, or whatever it might be, might have been terrible. There's actually an example in the information memorandum, explanatory memorandum, that actually discusses a farmer who last March had a devastating crop due to the drought. So March last year in 2019 was terrible, and so therefore this March or April wasn't that much worse. So what happens then? Well, the Commissioner does have a discretion to review how the test is made. Now, a lot of this stuff is still coming out. It's very, very fresh. So if that is your case, so that you're only a new business, or last year is not a very good reflection on what you normally do, then we can seek clarification for the Commissioner. But remember, you must evidence this, and you just can't say, oh, well, I think this, or I want to use this test. You need the Commissioner to accept that test and then use it. So there is hope for other people who have dramas about last financial year. So don't give up. Speak to someone, get some advice. Let us know if that's the case in your position. Next slide, Michele. Okay, so a lot of questions that we're getting as well is, can I register during the life of the scheme? Absolutely, you can. So the scheme goes for 6 months. So you can claim in this particular month if you pass the test in March or April or the quarter. But you can only claim from the first date of the month that you do qualify. So if you only qualify in the month of July, then you can only start registering and start claiming Jobkeeper for the month of July, the full month, so from the 1st of July onwards. So you need to ensure that you're claiming for the right period. So you can't backdate your claim. Obviously April, because the legislation came out in the middle of April, then you can go obviously backdate and start it from say the 30th of March and catch up those payments we'll talk about. But you need to understand that you're not out if you can't get these first months. You need to start looking at it, because obviously clients that we're seeing are starting to taper now, so they might not be eligible March, April, May, but maybe June, July, August they might be. So there is hope, so keep reviewing, and that's very important. Okay, so what we needed to do now is look at employees as well, because like I said, the most important thing I think, and this is where I guess the legislation or the media was pushing all this about employees, if the employer is not eligible, there's no point even going to this step. Okay, so once we've identified that that we're happy that the employer has passed the test, then we've got to look at the employee side. So the employees, the way that I think is easier to work out what employees are eligible is to work out which ones are ineligible. So, but pretty much all employees that are employed on the 1st of March. So that's the big trigger date, 1 March. So you're hearing all these dates, 30 March, May, whatever it might be, but 1st of March is the date that you had to have been employed attached to an employer to be in the system for employees. The next thing that you've got to understand is it's a one-in, all-in basis. So once you as an employer are part of the Jobkeeper, then you have to then select the employees that are eligible. We'll go through it in a second. And then all the employees that are eligible are in. You can't just pick and choose the people that you want to be in the Jobkeeper and the people that you don't want in the Jobkeeper, except for the fact that an employee can opt out of it, right? So it's not up to the employer to exclude eligible employees. I hope that makes sense. We'll look at that a bit further. Please do not assume that all your employees that are on the 1st of March or employees that are on your next payroll have applied. That's very important. You've got to make sure they do on a case by case. So do it on a line by line basis. Don't just include everyone, please. That's very important. So again, like I was saying, let's look at the people that are ineligible. So therefore, pretty much the opposite of that's going to be true, and the rest of them should be eligible. So if you're under 16, sorry, you can't be part of the scheme. Casuals. Now this is probably the most contentious one. So casuals was less than 12 months regular service or a permanent employee of another employer aren't included. Now, in my next slide, we'll talk more about how that works. But casuals are the one that you just got to put a bit of a inverted commas and maybe around it. Employees that are on non-prescribed visas are excluded. Foreign employees, other than the New Zealand 444 visas, are not included. Employee that's nominated by another employer for Jobkeeper. So you might have an employee who's already working maybe part-time for you, part-time for somebody else. So if they've nominated for somebody else, therefore they're ineligible. This next one's a bit hard to understand, but it's part of the legislation I put on there. So if an employee is paid less than $1,500 per fortnight, well, they're not eligible. So I know that you guys are starting to think now, does that mean all my people that I paid less than that are not eligible? Well, no, unless you top them up, and we'll go through it in a second, okay? And so therefore the big one here is employees that were not employed by you on the 1st of March, they're not part of it. So if you employed someone the 2nd of March, 3rd of March, 4th of March, it doesn't matter how, if they're full-time, part-time or whatever, they're not able to be part of your Jobkeeper application. So here's a casual one. So David worked as a casual. So he worked for them in March 2020. So he passed the test on the 1st of March. This guy David was part of that employer. However, and he also worked since December 2018. So he's been there for a while. However, this is his job history. He only worked a week in January, 3 weeks in February, Then he didn't work until May, where he worked 2 weeks. Then he didn't work again until he went in August, and he only worked a week there, and then nothing until November and December. So if you have a look at the facts of the matter of this one, you can tick a couple of boxes. He was employed on the 1st of March, big tick. He has definitely been there attached to this employer for over 12 months. However, the ATO is probably going to kick this one back because of the fact that there's no regular or systemic employment attachment of this employee. It's more haphazard and irregular. So that's going to be a drama. So again, this is very high level. Don't start putting your own situation in there, but seek advice if you're a bit worried about it, or you include a lot of casuals, especially my hospitality clients. Okay, these ones here I'm going to run through pretty quickly, but so what happens if you've got an employee on leave? So they're already on leave, or you might have told them to go on leave because before the Jobkeeper came out, that's what you thought was the best for them. Well, as long as they're on leave, they're okay. You can still claim Jobkeeper. Again, you still got to meet the general eligibility, and you've got to pay them the top up if they're not getting $1,500 a fortnight. However, if they're on workers' compensation, but if they can still do a reduced amount of hours at your work, then they're still eligible. However, if they're full on off work, then they're not eligible. People on paid parental leave are totally okay to be on this, except for the fact if they're getting paid at the same time that parental leave by Service Australia, formerly Centrelink. So if they are getting paid that, you can't double dip. Stood down. So this happened a lot. So when everything was up in the air and the Jobkeeper hadn't been actually formed as legislation yet, a lot of people were talking to the HR and they decided to stand down employees. I'm not legally able to talk to you about what stand down means and what you could do or what you should do. That's more HR. But if you did stand down employees, so they're basically at home without pay and they might have gone out to get job seeker, they are now, as long as they've still attached to your employment, eligible for the Jobkeeper payment, provided you pay them the amount of the $1,500 a fortnight. So you must pay that amount of money, and you can back pay them. So as long as they were in your employment on the 1st of March and you stood them down, you can actually reattach them to your pay period and back pay them the Jobkeeper, and they're eligible. Next slide. Okay, terminated. So if you decided the only thing you could do is terminate an employee because you had no actual work from you, you're closed down, there wasn't a place of work, you can rehire them. Because of the fact that they may have been working with you on the 1st of March, that's the trigger date, then they can, as long as you, again, and they meet the eligibility test, as in non-foreigners and that sort of thing, then you're okay to put them on onto Jobkeeper, and then you can backdate their payments as well. That's totally okay. That was one of the whole reasons this came in. Now, this is the thing that you're hearing a lot at the water cooler, this $1,500 thing. So employees must be paid at least $1,500 per fortnight before tax. So remember, it's still a taxable payment. You still got to deduct tax out of it, but they must get that money paid every fortnight for you to be eligible to tick the box. So if the employee was not paid at $1,500, then they can't be an eligible employee. They're off your list. So what do you got to do? Well, then therefore you've got to top up their payment. Okay, so if you physically have not paid them $1,500, I must emphasize that, then they are not eligible employees. So if an employee was only being paid, say, $1,000 a fortnight, you then have to top them up to them an extra $500. Therefore, they're eligible, and then you will get the full $1,500 back from the government, part of the subsidy. And so therefore, it may result in some employees getting paid more money than they would otherwise have done. Okay, and that's just the way the legislation's scoped. Some people will get less, some people will get more, but hopefully we're going to get through. Therefore, yes, the other issue is you must pay employees first and then get the payment back, and we'll talk about that a bit later. Super, okay, boring, but let's talk about it. It's very important. So if an employee is not working at all for you and you're just going to basically flow through the the Jobkeeper payment directly to the employee, so you're just going to say, stay home, you've got no holidays, we're not paying you, you're not going to be working for us, sorry, then the Jobkeeper, you still pay them the $1,500 Jobkeeper. That's not subject to superannuation. So there's no super, you've got to deduct the tax as normal, that's fine. If an employee is still working, and it's getting the normal getting more than $1,500 normal work from you, then super is just paid normally, nothing changes. You guys will get that subsidy to cover your cost up to $1,500, but you pay super. If on that prior example where you're at $1,000 was what you paid the employee per fortnight normally, super applies on that $1,000 as normal with 9.5% or whatever your statutory instrument says. If you've got a another job award, but you don't have to pay them any super on the $500 top up. Right, this part here, it starts to get into the, remember, all this stuff here has the same rules, whether you're a business, a big business, small business, company, trust, in between, partnership, or whatever it might be. But now we're starting to talk about your sole traders. You're hearing a lot about sole traders, and the government has catered for these people. Now we're talking about sole traders, talking about trusts, companies, partnerships. What happens if I don't employ people? What happens if I work for myself? This is where we start talking about. We've got this terminology now called eligible business participant. Now, this is the new terminology, and what that means is a person who is working in a business who otherwise doesn't get paid a wage from that. For example, takes drawing or trust distribution or a dividend. Okay, so all the normal eligibility criteria still applies in this case, but they don't. But they will get access to Jobkeeper. Remembering, very important, that if you've got a business on the side and you're an employee or a permanent employee of another employer, then you can't get this. You can't be an eligible participant of your own business. So also the big controversy here is that every entity, I'll call it, or business, can only nominate one EPB per business.
Okay, I'm sorry, I just wanted to cut in. I've got a question here from James, just referring back to that question before with the casuals. Does that apply to casuals as well?
What? Sorry, Michele, can you?
So with the whole, payment of super. So are they?
Absolutely. The fact of the matter is, it doesn't matter how the basis of payment is. If you're getting a top-up payment of Jobkeeper, then that element of Jobkeeper, and it could be the whole $1,500, or it could be part of the $1,500. That portion that's actually Jobkeeper is not subject to superannuation, irrespective of whether someone's on a casual rate or whether they're on a part-time or full-time rate.
Okay, cool. That's awesome. So sorry to butt in there. So talking about the business participants, you've got sole traders. I think that's obviously a really big one out there.
Yeah,
so you run us through that.
Huge, yeah, absolutely. All right, so in this case, the eligible business participant is going to be the sole trader, obviously, and as a sole trader doesn't pay themselves wages, they're all going to be eligible for the Jobkeeper. Now, remember, in this business still has to meet all the normal tests. You can't just go and get it because it's a good thing to do. It has to have a reduction in business revenue. Remember that test we talked about before, by 30% or more. It has to go through all those tests. And the other thing that you need to do here is that you must have an ABN. We need to supply the name of the person that received the payment and the tax on number. So in that case, that person who's a sole trader, provided they meet those tests, is eligible for $1,500 per fortnight through the Jobkeeper strategy. So that's really good for those guys. Now, this other one here is other entities. So as you can imagine, a lot of people have different entities, company trust partnerships, or partnerships between companies and trusts and so forth. So what happens there? Not a problem. You still can do that. So we might have a client who might operate through a trust. They don't have any employees. However, they are suffering of downturn in income, provided they are by 30%. Then they can attach one of their, in the case of a trust, they can claim under one beneficiary of the trust. So only one person. So unfortunately, yes, if a husband and wife is working in that trust, we can only claim for one. In a company, we still can do the same thing, and they can claim, the claim limited to one active shareholder or director. And as a partnership, unfortunately, a partnership is obviously two or more people or entities working together in a common goal to make profit. Only one of those partners. So there's going to be a lot of reverse engineering on how that works and what's going to happen, but that's something that's better than nothing, but that's the way it is.
Canio, I just wanted to jump in and just let everyone know that obviously today there was a change in the system with the ATO. So we were trying to put some applications through, and the sole trader thing, just going back a slide, the sole traders form with the ATO wasn't actually sorted, so we couldn't put the applications in, but I have been alerted that this afternoon that was able to be done. So that's back on track, so that's good. Yeah,
absolutely. There was a lot of conjecture. I remember everyone's running around the office worrying about that, but yeah, so that's and when you're going to find those teething issues, like as much as we have issues and gripes with the ATO, they have done an amazing job, to be honest, trying to get all this stuff, all these papers done so we can actually get this through. And they've been under a lot of pressure, just like a lot of us. There's going to be some teething issues. Obviously, I've got children and being homeschooled, and we've had an umpteen amount of issues with trying to get them. So imagine this scheme at the moment, we've got hundreds of thousands of businesses applying for it all at once, and it hasn't crashed, but there are going to be some teething issues. So, but anyway, we'll keep you informed of those things. Let's look at the payment mechanics now. So it's all great that we're eligible. So now we've gone through the whole thing about finding eligibility for an employer, finding the employees that are eligible. Now, what the hell are we going to do? How are we going to get our money? So the ATO is, by law, has to pay the amount of money to the employer, or if it's an entity that's a sole trader, to that sole trader entity within 14 days of the end of the month. So we're looking at the first payments that were going to be backdated from 30 March for that first fortnight. That will happen the first couple of weeks of May. There are talks that it might even be in the first week, but by law it's 14 days into the month. So just remembering that that your eligible payroll is a fortnight. So you may be paying people in different payment periods. Obviously, weeklies you've got no problem at all. But monthlies, we're going to have to ensure that we are compliant, and we'll discuss that at another time if that's your case. We can discuss it in one of the questions, I guess. Next slide, Michele.
All right, that's all there, I think, Canio. So I think that's really useful information for all of us out there. There's been a lot of questions come through. Canio, I'm just going to turn your screen off there for a second. Yeah, so we've had a lot of questions come through while you're talking there, Canio. So you might be able to get back and answer a few of those, but I would like to bring up a couple of those questions towards the end. So please keep sending them through. Thank you.
I just wanted to say as well, apologies for all the people who couldn't see my face. I know that's very important to a lot of people, so we'll rectify that. And I'm sure there's a lot of you getting sick of seeing my face, but sorry, even us have little technical issues. So we'll move on then.
Right, so we'll bring Canio back later on to run through some examples, but wanted to cross live now to Megan. So Megan's going to run through the registration process and the risk management process as well, and keeping in mind that obviously the employer eligibility is the major thing that we need to worry about in this webinar, because if we can't register for this scheme, then obviously we can't go further. So I can't stress enough the importance of that. And also, as we talk about the risk management profile with Megan, understand that if you do get it wrong, yes, it could cause a repayment of all the funds that you've received from the ATO, and also interest and penalties. So let me jump over and grab Megan. So Megan, you there? Just can't hear you, Megan.
Can you hear me now?
There we go, beautiful.
There we go.
So, yeah, so step us through. I'm just looking at the registration process. So,
alrighty. Yeah, so obviously you can't really get to this point until you've passed all the other tests and made sure everything's in line. But once you have got to that point, you've got to then actually submit your application. And a lot of people would have filled out on the ATO side the sort of intention to claim form. That's not the actual form. So even if you've filled that out, it kind of doesn't mean anything. It doesn't mean you're in the system enrolled. So you've still got to either get in touch with us and we can help you do the enrollment online, or if you have got yourself set up on the business portal and you want to do this yourself, you can do that as well. So as well as doing the online enrollment form, you've got to make sure that all of your employee nomination notices are filled out. So each employee that you'll be putting onto the Jobkeeper payments need to sign those forms and get those filled out. You don't have to actually file them in anywhere. You just need to keep them on hand, send them to us if we're your registered tax agents, just so we've all got copies of that. The other thing that you'll need to do is, once you have got those nomination notices signed by your employees, you have to just sort of put it in writing and send a follow-up letter to them, just advising them they are on that Jobkeeper scheme under your ABN. just because they can only be registered for one employer. So they can't go, if they've got 2 or 3 jobs, they can't go and do it, sign up for all 3. Got the next one? Oh, yep. Alrighty, so once you enrolled and everything's sorted, every month you're gonna have to keep that eligible employee reporting up to date with the ATO. So if you had 5 staff and they're all eligible and you sign them up this month, and then maybe the business sort of starts to take a downturn and you have to let some people go maybe, at the end of the month when you go to do the employer reporting again, you'll have to sort of deselect some of those staff that maybe aren't eligible anymore and won't be on the payments. As well as that, you've got your monthly reporting for turnover figures. This isn't to, if you're eligible in April or March, say, and then May, you don't have your 30% reduction. This doesn't mean that you're all of a sudden not going to be getting the payments and not eligible. It's just more of a ATO monitoring device just to see how the business is trading, how the business is working through this time. It really doesn't, I think a lot of people will probably freak out and think, oh, you know, what if I'm 30% down and then, you know, I'm only 20% down in May or June? This isn't going to take you out of the enrollment process. Alrighty, so risk for the employer. So obviously the government and the ATO are pumping a lot of money into this, and they're not going to kind of just let everyone get it and not check things. If you are sort of dodging up figures and whatever you might be trying to think of, trying to make up some grand plan, I don't think you'll get away with it. If you do sort of get it wrong and you estimate out your 30% or whatever, there is a bit of leeway. So they're not going to, if you're 29.99% reduction instead of 30, they're not going to say, you know, absolutely no, you're out, you know, pay us back all this money. But, you know, within reason, they could still come and say to you, you know, well, you projected that you were going to be 70% down and you're only 10% down, and come and speak to you, and you might have to repay the 1,500s that you have received. As well, if you are reporting sort of misleading information, there can be penalties up to 75%. They can sort of come after you as a director, you know, imprisonment. There's some serious stuff. So you really do just need to do it right, and, you know, speak with us and let us help you and make sure everything's in line. As well, the whole government system's got data matching. So, you know, with your staff and everything, all this information is cross-matched. So they're going to know who's being paid this amount, what other income they've got coming in, what other Centrelink payments they've got, all that kind of stuff.
All right, that's important information there, Megan. So, you know, I think, like I said before, the onus is on you, the employer, to get this right. Obviously, we're here to assist you and help you with that process. So, you know, the things that we need to be looking at doing now, looking at eligibility assessments, as we spoke from the get-go, are extremely important. The documentation, the registration process. Again, we're dealing with this stuff live with the ATO. We're looking and checking that the payments have been made and they're correct and so forth to employees. And we're also doing the monthly reporting and making sure that obviously the employees are ongoing, still eligible, because that's important through this process. And this process is going to run for 6 months. So we need to be wary of all that. I just wanted to run quickly through here now. So we've got a quick example that Megan and Canio are going to take you through. So I'll just read through the example here quickly. We've got Luigi and Maria running a delicatessen cafe through a trust that employs on a full-time basis their son, Luca, and the daughter-in-law, Valentina. Now, they've also got 5 other employees, Gianni on full-time, Alessandro and Mariana on part-time, and Cristiano and Giulietta on a casual basis. Now, unfortunately, due to the COVID-19 situation, the business has been significantly impacted, and due to social distancing measures, has been operating on a takeaway online basis since the middle of March 2020. Now, Luigi's tried his best to retain his team and transition the business as best as he can. He would like to look after his team as best as possible and try to make do without in-store customers and diners. He's amazed at the success of Maria's famous lasagna sales online and takeaway. They've been able to tap into a new market after supplying free trays of pasta to the grandson's school to the teachers once a week. The school's promoted this kind gesture to their social media followers. Maria was wondering what was available to help their business. So before we jump to Sam and run through a live demo there, I wanted to cross to Megan here. So Megan, I think you're still up on the screen there. So if you want to share yours, I want to stop sharing here. If you want to share your screen.
Alrighty, how's that? Can you all see that?
Yep, coming up clear for me.
Awesome. Alrighty, so firstly, this isn't obviously the JobKeeper stuff we've been talking about, but it is sort of indirectly related, and it is one of the other government relief packages that they've released. So this is the PAYG cash booster calculator. So we've just built this this calculator here just to help people understand what payments they're going to be receiving and when. So our example here, we've got Luigi's Deli Cafe. So we're going to say that they are on a monthly PAYG withholding cycle. So we select that. Now this section here, so we're going to enter what our PAYG for March, April, May and June is. So we're going to say we had $9,000 withheld for March. So March, you know, we were kind of trading as normal until towards the end. So we had sort of equivalent to a full month's worth of wages there. And then April month, we kind of dropped off a little bit. Maybe a few people were stood down, or we just kind of reduced hours a bit. So we're going to say we've got $5,000 in tax withheld there. And then May and June, we kind of really laid it off a bit, and there wasn't that much work. So we dropped our PAYG down to $4,000 per month here. So this is what you would have on your BAS figures or your IAS. And then this bottom section here actually calculates for you what cash boost payments you're going to be receiving. So these come through as a ATO credit when you lodge your activity statement. So that's the first bit there. And then the second tool that we've built out is our Jobkeeper tool here. So this is very kind of simplified, sort of basic high level version of it. So we've got here the turnover reduction. Again, this is kind of very simplified version. You do really need to go and sit down and do this properly and work out what these figures are. But let's say we had March 2020 there, and we wanted to use that month as our comparison period. Gross turnover, we had say $100,000 for March, and last March we had let's say 120,000. So that's going to show us, okay, well your drop there was only 17%, so you're not eligible based on those figures. So if we fix that up and say we had 70,000, going to flick us over to yes. So that's that first section there, and then we've got your employee test down here. So these are already filled out for our exercise, but let's say Luca, his start date was the 12th of June 1997. Let's say that was actually the 2nd of March this year. That's going to show us, well, he's not eligible because his start date wasn't the right, you know, it was after the 1st of March. And then obviously it will calculate across here, enter in, okay, this person here, they were on normally $1,000 a fortnight, $1,500. It'll calculate that for you. Same if you do it the other way. If they're normally on $1,700 a fortnight, so your payment now is only $200 equivalent after the subsidy. So that's just a couple of tools that we've built to help people kind of understand how this works and what payments they're going to be getting for them. Just turn this back.
All right, that's cool. So I've got a question here. Would you mind sharing this in slides after this? Certainly, look, we if you can follow us on YouTube, all the videos are posted online pretty much straight away after the event. So jump on YouTube, look up Michele Romano and it'll be there. And also, if you need more information with these tools that we've built, please reach out to us at info@muro.com.au or Canio, myself, or Megan. So thanks, Megan. All right, so let's cross now live to Canio. Canio's going to run through a few more tools that he's got there built. Canio, you just want to unmute yourself?
Yeah, so can you all see my screen there? So we've got an Excel spreadsheet here. So what I've done here is we've built this table and it's not only a bit of a calculation. Okay, yeah, it's an Excel spreadsheet, which I am quoted to say it's probably in the top 5 most best ever inventions. And I can see all the accountants on the panel smiling and nodding. But it helps me not only work out where I'm at the moment with these JobKeeper provisions, but also helps me work out a little bit more. So we're all at MURO, we're all about not only giving you some information, but being more proactive about it. You know, potentially being very bullish about the situation we're in and seeing whether we can do what the government's mandated us to go out there and start working and making money and fueling the economy. So by all means, provided you're eligible for these provisions, there's no reason why you can't use them to your best benefit. And therefore, what this calculator also does is try to work out, well, can we keep people employed and what's it actually going to cost us after the subsidy? So going through this situation, we're going to go line by line. I know it's a little bit lengthy, but let's just have a look at it, because I'm a sort of person that I'm a visual guy, and I find that if I can understand something this way, then all the words that we've discussed before in PowerPoints aren't really that important. So let's look at Looker. So Looker, we already looked at the prior slide with the people eligible. Not worried about that. That prior slide that Megan showed us was important. Why do I care about these employees' annual leave? Because you can't put an employee on annual leave and have JobKeeper if they have, at the end of the period, less than 2 weeks worth of annual leave. Okay, so that's important. I'll show you how that works in a second. This is a live client. Obviously, the names have been doctored, although the name of our firm suggests probably otherwise. But the annual leave balance here for Looker is 186 hours. Now, remember, this is a fortnight. So let's assume maybe this is the first fortnight, the 30th of March to the 12th of April, whatever the first fortnight is, right? So what's happened here is that normally this situation occurs, where I've highlighted now. These employees work, and they're the normal hours that they work. So Luca works 76-hour fortnight, so does Valentina. Gianni works a full-time. Alessandro works 45.63 hours. He works 3 days a week, so 6-day fortnight, so on and so forth. And what happens is this is the sort of money they get every fortnight, okay? What's happened though, since JobKeeper's come in, and remember the first part about this is the employer has passed the test to become an eligible employer. So that's okay, we've ticked the box. Now this is why it's so important. This terminology, what is a JobKeeper enabling direction? These are all these things we're discussing as employers, what to do at our board meetings. Should we be putting Sally on stand down? Should we be reducing hours? That's actually got something that's actually got a name now. It's called a JobKeeper enabling direction. Now, Looker has not been given a JobKeeper enabling direction, so Looker doesn't change at all. He's still, after the coronavirus has hit, he's still going to be working 76 hours at his rate of $40 an hour. And so he's still going to get $3,040 gross fortnight with super. So his total cost and total pay is $3,328.80. He's not on leave, so his leave balance does not change from the prior leave balance. However, because the employer now qualifies as for JobKeeper, the employer at the end of this month will receive $1,500 for this particular fortnight. So if you have a look at it, the employee difference. So let's look at these squad. This is the extra part that I've put into this to help you out. So the employee suffers no difference. They received, including super and obviously gross, so this is pre-tax, received $3,328.80 this fortnight, and before the coronavirus received the same. So he hasn't been impacted at all. He may have had his job change a little bit. He might be doing different things because the restaurant's closed and he's not waiting on tables or whatever, but in essence, he's still earning the same money. Let's look at the employer. So from Luigi's Delicatessen Deli, they're actually getting $1,500 for this fortnight to cover part of Looker's wage. So if you think about it, their difference is $1,500 better off. So the actual cost of keeping Looker employed for 76 hours has cost them $1,828.80. Now, hopefully you follow that. That's literally the amount it costs them normally, less the subsidy that they're getting. So if you want to take this a next step and be a cool accountant like us, well, what's happened there is you've actually, in effect, got an effective hourly rate drop. So it doesn't really cost you, in theory, $40 an hour. He's only costing you $21.98 an hour for being employed the same amount of time. So now I think some of you clients are starting to think about the way that we can do it, particularly clients who actually bill out their own time rather than being, say, in the service industry. Okay, so let's look at Valentina. Valentina's got a workplace directive to actually reduce hours. So she's gone from 76 hours a fortnight to down to 50. So what's happened in this case is that her job has reduced to basically getting paid an amount of $1,752 a fortnight rather than what she was getting before. But they are still getting a JobKeeper subsidy. So if we have a look at here, the employee is suffering a little bit. They've reduced their hours. So they're getting $900 roughly a fortnight less gross, including super, but they're working 26 hours a fortnight period less. The employer is actually gaining $2,411 because of the fact that reduced hours plus the JobKeeper subsidy. So if you have a look at this, this Valentina, for 2 weeks, it's only cost the employer $252 for that whole fortnight period to have this person employed, which breaks down to $4.60 an hour. Which means that their productivity has been reduced by 26 hours. And so this table goes basically on to show different scenarios. And I'm going to just go on to this person here, Alessandro. Johnny, and I don't want to go through everything line by line because we'll be here forever, but Johnny's actually got a little bit of our annual leave getting paid as well. That's his difference in his scenario. Alessandro, together, he's had a reduction in hours, but what's happened now is that his reduction has only made him work $736 a fortnight. So again, we are eligible, but if we only pay him $736, he becomes an ineligible employee. So we must top him up by $764 gross to be over the $1,500. So Alessandro's only cost us $2 an hour. So it's cost us $70 over two weeks to keep him employed. Now, Mariana was out and Julieta was out. Cristiano, okay, so Cristiano's been told to stand down. We don't need you at the moment. He was a casual employee who basically did 30.4 hours every fortnight. We've told him to stand down without, he wasn't getting paid. Now he's actually able to get paid. So Cristiano's getting paid the full JobKeeper allowance. So he's getting paid $1,500. So if you have a look at Cristiano's side of things here, he's actually better off by $1,000 a fortnight. Although he's actually not working 30 hours that he was working before. The employer is actually saving himself $499 because he's not paying him and he's not working. So that's very important on those stand-down provisions. So that's where you get that anomaly where some casual employees are getting paid more than they would otherwise do it. This one here, the only reason why I put Luigi in there first for you guys is because Luigi is a typical of most people who work through trust. They don't get paid themselves. They just take drawings of profit. But because Luigi is an eligible business participant, he can get paid the JobKeeper. So he'll get his $1,500 a fortnight, which goes into the trust. Unfortunately, Maria, it could have been either or of them, but one of them had to miss out because only one business participant can get there. So if you have a look at this just in general, the actual employer, rather than paying a payroll including super of $11,950.39 every fortnight, they're now been reduced to paying a total amount of payroll of only $4,462.20 after all the subsidies you're getting, and they're only reducing their hours by $176 hours a fortnight period. So that's a worked example of how it all can work in a perfect world. But again, they're the sort of things you need to do line by line for clients and for yourselves to make sure that you're not losing out. So hopefully that gives you some help.
Very good, Canio. Thank you very much for that. So, like all accountants, loves his spreadsheets.
Love it.
All right, guys. I'm just going to share my screen again, and you should be able to see a picture of Sam up there on the screen. So I wanted to introduce Sammy. Sammy has been our account manager now at Xero for the last 3 or so years. Xero, as you all know, we are very sort of advocates for Xero, the software, and Sam's helped us along that journey, helped us move into that platinum partner status as well. So without further ado, I wanted to welcome Sam. Thank you for waiting patiently there. I hope you got through that computer game while you were waiting. But do you want to just share your screen and show us through the tips and tricks and things that you got up your sleeve?
Yeah, absolutely. So thanks so much for having me again, guys. Really appreciate it. And I really think that these sessions are in these times when things are becoming a bit more interesting around legislative changes and everything Jobkeeper. I think it's fantastic you guys are putting this on. So I really appreciate being a part of it. So really what I want to do tonight is we're from the scenario, going to paint a bit of a picture so everyone's on the same page. Where we've got to is the business is eligible. I'm going to piggyback off the worked example Canio just gave and put, I guess, some processing back end behind it to show you how you can put it through in Xero and what we've done here around Jobkeeper. Before I keep going, because I will just rattle, I will just keep firing along, but can I get a show of hands from the other panelists? Just this is all coming through okay? You can see my screen and you can hear the
perfect, mate.
Sound okay?
Yeah, very good.
Okay, perfect, cool. Okay, so to set the scene, the business is eligible, as Canio mentioned. We've enrolled for the business enrolled for Jobkeeper. We've set up STP within the business subscription, which is very important for Xero to help log this information with the ATO. Just so I'm not talking too many acronyms, STP is single touch payroll, which I'm sure everyone's heard about in some form of another, but that's the mechanism for lodging the pay runs and the pay information with the ATO. So what we're going to do is we need to make sure that's all been turned on. And we've also enrolled the relevant employees that Canio went through in his spreadsheet to be able to put them through for Jobkeeper. Now, if I'm speaking another language or if this is all sounding a bit, we've been through it, but if you need guidance around this, certainly the team at Michele Romano can help with this. And there are also obviously any more technical questions around Xero. We've got our help center as well, but we would really recommend getting this right first time. So what we're going to do now is we're going to update the pay items for our staff to reflect what Canio has been through with the spreadsheet to claim Jobkeeper. And then what we're going to do is run the pay runs for this staff for a fortnight. And then separate to this process, but just so no one misses out on what we're supposed to do, is you would then go and complete your monthly declaration with the ATO, either via your business portal or again, the team at Michele Romano can help you there. And finally, what I'm going to do is show how you can then receive the funds from the ATO and really, I guess, dust off my old accounting skills for what little there were and see what I can do to give you, to do it as effectively, pardon me, as possible. So first and foremost, what I'm going to do is update the Jobkeeper pay items for my team to be able to put this information through for the staff. So first and foremost, I've gone into the demo company here. So it is in the Xero file if you want to have a play around. And what we're going to do now is I've just selected the demo company and settings. So now what I'm going to do is click into my payroll settings and open these in another tab. So if I go into payroll settings, what I've now got is the back-end information in my Xero file to be able to run the pay calendars and the templates. So what I'm going to do is click into the pay items. And what we've released in Xero now is this Jobkeeper allowance. So that's going to allow you to put through any of the top-ups and Jobkeeper subsidies there that you're paying to the team to be able to claim those when you lodge them with the ATO and to put forward for that request there. If I click into the allowance, what you'll see is, actually this is the one I've set up, pardon me, I'll go to the one that's been put in normally, the Jobkeeper payment top up. So you can see here what it's got is under the type is it's got Jobkeeper payment top up. We've given it the name Jobkeeper payment top up. I sound like a broken record, and you can update the display name there. For putting through this allowance, it's registered as an allowance in Xero. You can then go in and add the amount. Now, this is set to 0, and I would recommend that because what you're going to find when we go through the worked example is you don't want to go and just set, say, the $1,500 a fortnight or the weekly amount, because if you set it in the back end here, it will put that through for every person. And we actually need, for some employees, to alter that slightly. And you'll see that as I go through. Expense account, that's going to our wages and salaries. And you can see it's not exempt from the pay-as-you-go withholding. It is income, but there isn't the S Super guarantee contribution required. And we want that pulling through to W1. Okay, cool. Now, you'll see here I put another one through. Now, the reason why I entered this in the pay types is really just because prior to our release to manage Jobkeeper, some of the guidance given was to set up an allowance type to put that through in lieu of us updating the software in the back end. Now, I really can't give enough credit. I don't really want to sort of pat on the back too much, but I do think the payroll team have been really smart and efficient in getting this one out, because in the couple of days it took us to release it, they've also thought ahead to what's going to happen once people have started to record it already. So with these allowances, what you can do is, if you've already set up some form of Jobkeeper allowance for your team for the pay runs, you can simply go in and update that Jobkeeper, that allowance type, to Jobkeeper. And that's then going to flow through with your single touch payroll when you lodge it, to be able to update the government that you're actually putting through a Jobkeeper allowance top up. These, as I mentioned, you can go through and change these other items, but we're happy with those for now. We've set them up previously. So what we've now done is we've gone and updated the back end settings to allow us to put through the JobKeep subsidy for our employees, or the extra bit of funds there. Now, just give me 2 seconds. I'm just going to move some stuff. Cool. Now, what I'm going to do is go through. We've updated the back end. What I want to do now is update my team's templates for the payroll. So to get to this screen, all I need to do is go payroll employees, and this will bring me into the current employees screen. So the two I'm going to focus on today, because I don't want to go through every single one, I'm just conscious of time, is I'm going to focus on Alessandro and also Luigi. And what I'm going to do is, Alessandro is, he's working with us continually. So what I'm going to do is I'm going to update his template. And then what I'm going to do is also do Luigi, and just quickly show a once-off adjustment to his pay when we put it through, because he's not continuing with us there. This is just obviously to give you two different scenarios. So first and foremost, what I'll do is I'll go in and I'll update Alessandro's pay template. So if I click on Alessandro, starting with an A, very nice. And what I can do now is go into Alessandro's pay template. And now what you can see here is we've already got his ordinary earnings and his standard template there. But what I can do is go in and add an earnings line. And if I select the drop down, I can simply go here and see the Jobkeeper payment top up, which we've introduced in the software. Now, if I click OK, what that's going to do is then, as I run Alessandro's pay each fortnight, that will automatically populate the pay slip, so that I've got the box there to fill in and add any Jobkeeper top up that needs to be put in. So I'll save that down. And now, as mentioned, I could go through and do the other stuff so that I could put in the Jobkeeper allowance each time. But just in the interest of time, as I mentioned, what I'll do is I'll get in and do a pay run. So if I click now payroll and pay employees, that will take me in. What I've done here is I've actually already created a draft just to obviously map the spreadsheeted scenario. If I go add pay item though, I could go in and add the pay for this fortnight. But what I'm going to do is go into the one I've already created. And in here, here's essentially the Xero example of the earnings from Canio's spreadsheet. Now, what I want to do, as mentioned, is I just want to focus on Alessandro to begin with. And what I'm going to do is click in. And if I go into Alessandro, I haven't pulled through. What I'll do is put that earnings line in. I set this up too early, but I can add that in the pay item. And now what I can do is add the top up amount. So if I go in, I simply enter 451.20, and then I get to my top up amount to the 1,500 to qualify there for the Jobkeeper. Now I simply save that. And as mentioned, now what I'll do is I'll go and do Luigi. What that's done by putting through that Jobkeeper payment top up is that's also then gone and done the adjusted pay-as-you-go withholding for the 1,500. So just to keep that in mind. Now what I'll do is go down and select Luigi. As mentioned, This will just be a once off. I'll put in for Luigi. I don't have an earnings line there at the moment, but I can always just add that as mentioned. And if I go in, JobKeeper payment top up, okay, and then put in the 1,500. This will probably be a better example because what you'll see now is if I go through and just, oh, whoops, that's, oh, damn it. Sorry, guys. Okay. Clearly a bit rusty. And then what we'll do here is add the 1,500. Now just give it time. I was just a bit quick. And now it's pulled through that pay-as-you-go withholding. So that's a better example because there was a zero figure there to start with. So now what I could do, as mentioned, is go through and do every single employee for the fortnight. But what I'm going to do is, just so you can see this process flowing through, I'm now going to go and post my pay run. So this will post my pay run. I'm happy with everything and I'll click OK. Fantastic. Now, what I would do here is, as mentioned, you want the file to be registered with Single Touch Payroll or STP for the purposes of lodging the JobKeeper through Xero. And what we can do now is go and file this pay run with the ATO. This will come through with the declaration. Yes, I'm authorized. Fantastic. Sign my life away and submit it. Now, this is the demonstration company, so I'm not lodging anything too untoward with the ATO, I promise. But what the reason why I want to show you is just step through that process for lodging it with Single Touch Payroll. And what we'll do now is we'll go in and see how we can then collect that information. So what we can do is go Payroll, Single Touch Payroll. And I'll actually just jump to this one. Oh, actually, that's probably a better one anyway. I did file one earlier. And what we can see here is that it's going to tell me which of my pay runs are now sitting with the ATO. The reason why this is important is this is for anyone who, I guess, wants to go in and really examine what they're telling the ATO or what details are flowing through to make sure that with JobKeeper that they're actually lodging the correct amount for the subsidies and they're going to get back, in Canio's example, the 1,900 or those figures have come through per the spreadsheet. So what you can do is you can click on the three little icons. I call it the hamburger. You can go and download the CSV, which has the details there around what you've lodged to the ATO. So like any good chef, I've prepared one earlier, and here's one that I've downloaded, and this is what it looks like. Now, I don't really want to freak anyone out or I guess get them too worried around spreadsheets and everything. The reason why I downloaded this, and just pardon me, my screen is a little bit wonky. What I will do here is just, okay, so if I go along here, this was the section I wanted to show you. So what this is showing me is who's started with JobKeeper, what I've lodged. As mentioned, it's one I prepared earlier, so don't worry too much around the numbers. I really just wanted to show you where that section is around JobKeeper and what we're putting through to the ATO. So if after you've lodged it to the ATO, you still want to go back and have a look and see what went through with that pay run, you do have that option. Okay, so from there, as mentioned, what we would do is we would go and complete the declaration with the ATO, either business portal or speak with the guys at Muscillo Romano. They'll be able to help there in terms of putting that information to the ATO. And then what we want to do is the next step is come May, the ATO assesses it and then gives us the payment for JobKeeper. Now, what we do is essentially we want to set up the account to receive those funds. And what we can do now is go in and add an account. This is probably very familiar to most people, but I'll just step through it so you can get ready. And then what you'll do is go down, select the account type. This will be other income. And then let's choose a code. I wrote one earlier and we will choose 280, next logical step. And you can call it anything, but I'm just going to, something obviously you want to keep a track of, but I'll just keep it JobKeeper allowance or something. And with this, we don't want this isn't accessible. We won't include this on the BAS. So I'll click save and now we've got our account ready. So when the funds come in, we can quickly and easily code it there. So I probably don't need to show anyone coding, but yeah, you would simply go into your bank and reconcile. If say this $100 was the amount received, just go ATO and then JobKeeper. JobKeeper. Save. And that's the circle of life, Simba. There we go. It's we've now done essentially finalised the processing of the JobKeeper both through the payroll and also then received it from the ATO. So I'll stop sharing my screen there and just go back to the slides, I believe, or maybe my face, depending on how lucky you are. And and that was it. That was what I wanted to run through tonight. I hope that was fairly succinct, as mentioned. There's obviously what we've been through tonight. There's a fair bit of detail there, but just really wanted to, I guess, remove a bit of the mystery around the processing. And just keep in mind, though, the devil's in the details, and guys like Michele Romano have clearly been over this, and we'll certainly be able to help with those details. So thanks so much for having me, guys. I hope that helps.
No, that's awesome. Sam, thanks very much for joining us tonight and running through that in depth. And I think, yeah, it's very important that we all understand how to process these pays. And I think the other side of it too is recording the income as it comes in, because obviously it is taxable, but there is no GST component attached to that income. So awesome. Thanks very much for that. Now we've got a heap of questions that have come through. So I just want to roll up the top here and start with, so there's a question from
Michele, if I could just say something.
Yeah.
Now, guys, I know that it's getting late, so please don't be offended if you decide to leave the meeting, and we'll send you we can get a recording as we discussed of this. But if you have to leave, that's great. If not, we're going to try our best to try to answer as many questions as we possibly can. I've started to put a few down through the chat area. But if you guys want to stay online, we'll try our best to answer as many as we can, because the interaction part of this is the most important thing, I think. The content has been done. We've showed you the information. You can look at that ad nauseum. But I think the most important thing about it is that put this whole thing now in context of your own business and see how it is. Hopefully what you got out of what we discussed is that it is a flow-through period. You need to look at all the steps one by one, and they almost are independent on each other. You also need to ensure that your software is recording things correctly and you're putting it through right, because once you submit things on single touch payroll, it's gone to the ATO, and it's very difficult to remove that. So I think the idea is that we're not here to pitch for business, but please, like Megan said in her discussion, that the ATO has got an enormous amount of ways to data match and to check things through your BAS and through different things. There's a massive amount, and I couldn't talk to you very deep on it today, but there's a lot of this conjecture about what the GST turnover is. Forget the word GST. The reason we put GST on there is because the ATO wants that. And what the ATO is basically saying there is that it's got to be suppliers, so GST suppliers that are connected with Australia, and it excludes things that are non-taxable suppliers, for example, bank interest and stuff. So that's why they're calling it. It's a pretty confusing terminology to use, and it's going to scare a lot of people off, especially people that are not registered for GST. But that's why it's important just to have a quick chat with us. I implore you to ensure you get this right, because if not, there could be you asking us to help with an audit activity. So please ensure that you are speaking to us and we can get it done properly. And there's always going to be, like Megan said, there's a reporting period for the next 6 months that you will have to do as well. So it's not just one in and it's done. You've got to keep on revisiting this. And that's why the ATO is doing it on purpose, so they can make sure that you're doing it properly, and there's more information up for grabs for audit activity.
All right, cool. Canio, there's a question here from Les Adams. So my wife operates as a sole trader for our portfolio of university student accommodation properties. We've been heavily impacted by COVID-19 restrictions, which made the student demand evaporate, and also by border closures. We're carrying vacancies of nearly 80%, which is unheard of in the 17 years of operation. She's employed in a PAYG job as well as sole trader arrangements. There are no employees. So the question there, does her employment in another job impact her eligibility for JobKeeper in the property management sole trader context?
Well, there's a lot of provisions there that this question touches a lot of different areas. If we go back to basics, it seems to me that they're struggling and they're reducing turnover. But let's go back a step. If his wife, as he said there, is an employee, then you can't get JobKeeper twice. So you'd have to clarify whether where she's employed at the moment is going to be claiming JobKeeper. If you're permanently employed by another employer as an employee, you can't claim JobKeeper as a sole trader. It's a bit of an anomaly, but that's the way it goes. So to answer that question, notwithstanding the fact that she's an employee, it seems to me that they are running a business. Now, there's a very fine line. I don't want to use this as my soapbox to talk about that, but are they running a business or is it an accommodation? Are they collecting rent? There's a massive line there to discuss whether a business. It seems to me at a high level they are potentially running a business, and the income is proper income. It's not just rental income, which isn't business income. So I think they would be okay to get the JobKeeper through that business. But I think that the other factors that he suggested on his message, that she's an employee, that needs to be clarified first. So potentially the husband, if he's working in the business, potentially he can get it as an eligible business person.
All right, I'm just going to jump down the bottom here. As a sole trader, if the turnover is less than 1,500 per fortnight, is a sole trader still eligible to apply for JobKeeper subsidy? Sorry, Samuel. Yeah, that's a contentious one. We've dealt with this this afternoon, and we believe that you can register and you should be successful with that one. So that's that. Now, Megan's got a question here. Thanks for information. As a sole trader, can I use the Xero report from April 2019 compared to the month of April 2020 until the 26th, which shows a drop in income of 50% to register? Yes. Is that enough information? I don't have to worry about employees at present. So, so you're basically just a sole trader. So you should be right to be able to use that. Now, a question from Sam here. When does the top-up payments for the past fortnight need to be made? So those top-up payments, obviously, if you're applying for the March period, those top-ups need to be made pretty quickly before the 26th. Is that right, Canio?
Yeah, I'd say the 26th, but the ATO, the commissioner, has said by the end of April. But I think if you have a look at the end of April, I think it falls on a weekend or something. So just be careful. So it's you don't want to have that 1 day cut-off issue. So I'd say give it by the 26th of April would be spot on.
All right. Now, I'm not sure if you answered this one, Canio. James has got, at the beginning you said if an employee was hired before the 1st of March 2020 and was fired thereafter, they are eligible to JobKeeper. What if this employee was working for 6 months as a casual?
Yeah, so there's all those things. First of all, so the employee was retrenched, I guess, after the 1st of March, but they were employed on the 1st of March. So that's a big tick. The fact that the particular classification of employee was casual means that you need to go that next step. Has that employee been connected with you for 12 months? And if it's only been 6 months is in this question, then no, that wouldn't be eligible for JobKeeper.
Okay. I think there was a question there around husband and wife owners. Yeah, here we go. So David has got a question. If you're a husband and wife owner and both of you are on the payroll with a regular weekly wage, are you both eligible for the JobKeeper payment? Now, unfortunately, I think the answer is no there. Both husband and wife are related, so you'll have a problem with that one.
If they're both on the payroll, I think that if I'm reading that, I think I had a quick look at that question. If they are both on the payroll, what type of structure is it? If it's not a sole trader, if they're both on the payroll, then and they're getting paid normal PAYG is normal, then they're going to be fine. Okay,
even if they're related. Yep.
Yeah, it's only when they're not. It's only when you have a situation when you're a sole trader or you're a trust or a partnership or a company that the principal people, I guess the family that runs the business, don't pay themselves a proper wage. They just take drawings. That's when you can only pick one or the other.
Yeah, so we've got that question from Kate. Looks like so. Husband and wife employed in business and both directors. Could they both be eligible for payments?
Yeah, Kate, you're fine. And email me tomorrow. I'll be able to clarify that. But yeah, you're all good.
Okay. I think that's about all the questions there that I can see. So there's a question from Alejandro here. I have a concern about my eligibility as I took over a business that has been running for over 6 years, but I only took over the one from last October. I'm still eligible for Jobkeeper.
It looks to me that, I haven't read that question, Michele, but it looks to me that if that business if you didn't have that business last year, you can't check the turnover, then you need to look at the alternative test. So the alternative test is all those sticky situations where the business didn't exist last year, you bought it off somebody else, all this type of thing. You can find an alternative test from the commissioner. Now, we don't know what the alternative test. It might well be that that you could test 2 years ago. It might be that you can test February and say, okay, well, in February I was turning over $100,000. In March, I'm now turning over $50,000. The commissioner may allow that, but we don't know that yet. So you need to speak to the, ask the commissioner that. And so those forms haven't really come through yet because the ATO has been catering on, I guess, maybe the 90% of businesses that are, I guess, normal have been around for the last couple of years. And that's the basic test. But I wouldn't discount yourself, Alejandro, if you think that if that's the case, drop us an email and we can explore that a bit closer for you.
All right, there's a question from Adam here. So what would happen if, let's say in August, you go back to normal? Do you just stop Jobkeeper? That's an interesting one. You know, if August, I mean, this program runs till September. So, you know, the 6-month period, but I believe you will still be in the Jobkeeper system once you're registered. So I think—
Yeah, Michele, I can help you with that one too. So like I said from that, I think that slide, the second or third slide, once you're in, you're in. So it does create a very, I guess, an anomaly there where you may have an April of 2019 where you just had a massive April, and your April this year was just a little bit just normal, I guess, but it wasn't anywhere near the prior April. Well, from a technicality, you're actually in Jobkeeper if you can prove that you're 30% less. So it may not be a COVID epidemic that's actually forced you to get into allowed you to get into the Jobkeeper provisions. It might be just that the test periods have been conducted in a very clever way and you're eligible for Jobkeeper. So to answer that question, if by August everything's rosy, you're still getting Jobkeeper. There's no reason, provided that you do your due diligence at the start. Now, this is where the ATO are getting, there's no specific, and I do speak to people that I know that are in the system, but there's no specific test that they're going to do that. But if you start all of a sudden having really poor results, because every month you're reporting your income, and all of a sudden your results are going really well, then I guess, and I'm just saying this at a very high level, don't read too much into it, but the ATO is going to say, well, maybe out of the 10 clients that I want to audit this week, this client that's actually showing that they're going crazy and there's only the month they could register they were low, maybe I'll look a bit closely into how they registered in the first place. So that's where I'll just be a bit wary. So that's why I get it right the first time, have no regrets and do it legally. And, you know, don't take the mickey out of this whole process. But, you know, if you can get a benefit legally, then I'm all for it.
Okay, cool. Canio, got a question here from Sam. I've enrolled already with the ATO and I pay the top-ups. Is there a chance they may say employee may not be eligible? On Xero it says that they are. I just wanted to sort of probably take this point to be able to tell you and say that with the Jobkeeper registration, I believe a lot of you may have done that yourself or may have got us to do it for you with the actual registration process. But that was only a registration of intent to start with. So please don't think that once we've put that intention in that you're registered, the next process here is that we do have to physically go onto the ATO portal and register you for the Jobkeeper scheme. And then also have to look at the eligibility criteria and obviously the eligibility for employees. So I dare say that that's right, Sam, but I'll get one of the guys to get back to you tomorrow on that one. All right, question here from Rhonda. So company XYZ as trustee for XYZ Family Trust. Director can claim Jobkeeper due to downturn in trading. Yes. Their wife who does part-time work in the business pays PAYG and is covered under work cover, does the wife qualify? Yeah, so I think that's the same question as before, Canio.
Yeah, I think what you're saying there is that as long as the employee, you just go back to basics, as long as that, say in that case, the wife is an eligible employee, so they're full-time or part-time or casual. If they're casual, their hours are regular, and there's a systemic approach to that. If they're part-time and they're full-time, that's easy. Were they employed by the business on the 1st of March 2020? And if you tick all those boxes and they're not foreigners and all those type of things, then yeah, of course, there's not a problem that you will potentially be able to claim that. Now, the employee needs to ensure that they're only attached to one employer, and obviously in this case, I'm sure that would be the case. But yeah, I can't see an issue that that in those circumstances that you provided that you'd be eligible to get it. Both people. The only query I'd say there is you just say that the director can claim Jobkeeper. Well, not necessarily, unless the director still needs to do two things. Is the director claiming it as an eligible business person, or is the director claiming because they're actually on PAYG? So there's two different things there. But prima facie, it looks like that's okay. Again, provided the employer meets the 30% reduction in income. So remembering, let's not get too involved in the employees. Let's get that employer thing done properly. And I'll tell you what, it's not that easy. You just got to make sure that and there's a couple of tricks of the trade that also comes into it as well. So that's the most important thing. Provided you meet the test, yeah, then I think you both should be fine.
Well, a question from John here. What happens with people going on personal annual leave? So I think that was covered in one of the slides earlier on, but assuming the employee meets those general eligibility criteria, they're not precluded because they're obviously on personal leave or on workers' compensation or parental leave. So again, Johnny, we can get back to you on that tomorrow just to cover off. Guys, I think we're getting up to sort of 8:30. Might have to sort of call it shortly. I think we've got most questions there, and apologies to those that we haven't touched on. Please feel free to email us and call us and get in touch with us.
I think there's one question I think I wanted to look at. It was it might be for you, Sam. I think it's one from Adam Pope. It might be something to do with I think it's something to do with Xero. So let me just
yeah, no worries. Well, just while you're looking for that, I've been looking at the comments and I'll just clear something up too. Probably something I should have mentioned earlier is you'll see probably one of the questions people are thinking at home is what's happened if I've got it wrong? What happens if something needs to be adjusted? What do I do if I haven't quite understood and then I need to go back and change something? So don't worry too much or don't panic too much. Obviously get advice on what the correct way to go forward is, but then you can always within Xero run an unscheduled pay run outside of the one we did and update that information via STP with the ATO. So like you saw, I updated the allowance. You saw I may go back and amend the amount that needs to be paid to an employee to let them reach that $1,500 threshold. This can all be done even if it is outside, say, that fortnightly or weekly or in some cases monthly pay run to be able to meet those requirements for the ATO. So that's just one thing I wanted to cover off that I probably didn't make clear just getting through the processing. The other thing was if you get stuck technically within Xero, and there's always Xero support via the question mark in the top right. So they're always happy to assist, and that's 24 hours. So always there to help you out.
Yeah, Sam, that question was how to notify ATO by STP within Xero of a nominated employee that otherwise is not using the allowance top up, but rather is covered naturally as they're earning over $1,500 a fortnight.
Yeah, so that would you would do their pay run as per usual. I've gone through the ones where we need to top them up or meet that 1,500. If they're normally, like I think just Luca was the example in your spreadsheet, just from memory. We'll see how my memory's going at 8:30, but probably off the rails. But from memory, he was the one who was already just naturally earning the amount. So with him, just payroll as per usual because he's already getting over that threshold.
Yeah, and remembering that the Jobkeeper in that case becomes a subsidy to the business. So
Exactly. Yep.
it's not that, you know, and this is why it's important to understand that this whole scheme is the ATO or the government wants us employers to be paying the employees rather than going to Centrelink. And so that's why I think it's been a great methodology, because that's where employees get paid every week anyway. We know the bank account numbers, we know how they get paid. We want them to work for us if things change. So it was a very good initiative. I would just like to say, before Michele finishes off, that you know, businesses that we're looking at, we're triaging businesses every day, and it's been one of the toughest periods of my professional career, and not, you know, judging by the hairs on my beard, I've been around for a bit now. But in saying that, it's shown me so much spirit. It's shown me that how we can, as a community, dig in, and although we're faced by adversity, and we're still able to sort of soldier on and regroup and modify our businesses. I've seen businesses that have changed, you know, 180 degrees to get through this, and I think it's just a matter of time that we'll get stronger, and we'll be, and this will be something that we'll be able to tell our children and our grandchildren about, that we've survived. And so I just want to shout out to all you awesome business people out there. You guys support the rocks of this economy, and we're there to support and stand right behind you, everything that you do. So please do not hesitate to contact our team here to provide anything that we can do to help you out to get through this. So thank you so much for all your help and your kind words, and I'm signing off. So I'll leave it over to you, Michele.
Thanks, Canio. And yeah, look, I just wanted to say a heartfelt welcome and thank you to all the panelists tonight for joining, Canio, Sam and Megan. Insightful as always. Again, thanks to all our guests tonight. Just reading through all the comments now, absolutely amazing. You know, look, that's the sort of stuff that we get out of bed for every day to make sure that we can come and help you guys. So please, thank you. I just wanted to, again, strongly suggest to you all that obviously, if you need help with the Jobkeeper applications, please reach out to us so that you can avoid any sort of complications and things that go on. Like I said, I can't stress enough that the employer eligibility is very important. It's something that you shouldn't really take lightly in lieu of obviously the ramifications with the ATO and penalties and things. So again, yeah, without sort of rambling on here, again, please remember, follow us on Facebook, Instagram and YouTube, and keep up to date with any new webinars that are coming your way. Thanks again all, and we'll see you soon. Good night.